Hi, and welcome to another ZarMoney training session. In this module, we'll be going over the difference between purchase orders, receive items, and bills. A purchase order is a non-posting document that tracks the initial order placed with a supplier. A receive item is used prior to receiving a bill from the supplier as a posting transaction, which updates inventory and offsets to a liability type clearing account. This account is called pending item receipt. You will create a receive item to update your stock status. Once you receive the bill from your supplier, you will create the bill directly from the related receive item transaction. This action will transfer the amount on your balance sheet from the pending item receipt account to accounts payable. Okay, so what is a purchase order? A purchase order is the order request sent from a buyer to a seller. It outlines the purchase prices that have been agreed upon, type and quantity of items being ordered, and the payment terms. Purchase orders ensure that the products that arrive are indeed the products that were ordered. Okay, so after creating this purchase order, let's see the effect on our stock status. You can click the inventory item directly from the purchase order. As you can see, the stock status now says that there's a 45 quantity on purchase order. Okay, so then what is a receive item? A receive item transfers the status of an inventory item on purchase order to be included in quantity on hand. You can create a receive item from the action menu of the related purchase order. Once we create the receive item, let's check the stock status now on the ink inventory item. As you can see, the 45 units was transferred from on purchase order to quantity on hand. Okay, now let's take a look at our chart of accounts. I'm going to scroll down and go to the pending item receipt account. It's a current liability account. And as you can see, here is my receive item. This was a posting transaction while my purchase order was not. You can enter a bill directly from a receive item. But first, let's look at the account register. As you can see, the adjustment to inventory was coded to this pending item receipt account. To transfer this to accounts payable, we're going to enter the bill directly from the actions menu of the receive item. What is a bill? A bill is entered into your books to record the goods or services that you received from the supplier that you are obligated to pay for. Here you can see it's referenced to the receive item, and the receive item is referenced to the related PO. The purchase order and the receive items have now been closed out to a bill. Okay, let's go back to our pending item receipt account. As you can see, the transaction for $90 is no longer in this account. That's because when we entered the bill from the receive item, it transferred from the pending item receipt account to the accounts payable account. It's important to note that you don't need to use the receive item function. Instead, you can enter a bill directly from a purchase order if this is more convenient for you. And as you can see, the bill has the same effect on stock status as a receive item would. Okay, that's all for this training session. For more help, visit us at ZarMoney.com.